So now with that, I would like to invite to close out this exhilarating day our CEO of the GIIN, Amit Bori, to provide some closing thoughts and reflections in conversation with Billy Nauman of FT's Moral Money. So thank you. Please welcome them to the stage.
Hi. So, yes, thank you all for being here. This is a very exciting conference, a very exciting time to be talking about these kind of issues. I think Amit and I were talking about it a little bit earlier, and I think probably a lot of people like us were at the UN General Assembly and all the events around Climate Week last week, and I think it's a perfect time to talk about what this discussion, the topic of the discussion, which was beyond hope and fear. Will we ever get there? There was a lot of high-level discussion last week about setting agendas, setting targets, about how do we reach the SDGs, how do we transition to a low-carbon economy, and there's all this talk about mobilizing the private sector, and that's all well and good, but going from the this is what we need to do to this is how we do it, I think that's a perfect intersection with this group and all of the people here in this room and what you do with the GIIN. So I'd like to hear your take on just the question posed in the title of this discussion. Will we get there, and how do we do that?
Yeah. No, thank you, and thanks to everyone for such a great day. I think it was filled with stimulating discussion, both in the panels, but also out as everyone was engaging with one another. And on this topic, kind of coming from last week, into the GIIN Investor Forum, I do think I carry a lot of enthusiasm for this event and this community, and that's colored in part by the mixed feelings I have actually with the UN General Assembly week. And what I mean by that is that it's a very special week for us at the GIIN. In 2009, we were launched during the week of the UN General Assembly. And I think it's so incredible to have that gathering of leaders from all sectors of society. Obviously, heads of state, corporate leaders, investors, heads of NGOs, activists, all together to talk about this big, important agenda that's embodied in the Sustainable Development Goals. And you can definitely get a sense that there is growing momentum, but I say mixed emotions because I also worry that there is a lot of energy put into kind of what needs to get done, but at times I think the amount of progress is really sobering, and at times really discouraging. And I think that is why it's such a nice pivot coming into this event and this community, because this is fundamentally a network of practitioners. And we're putting the money to work, as you heard from the last panel, to build businesses that are having a real impact on people's lives. Obviously, our community is growing, it's building, we've got hard things that we need to work through, but it's incredible to see the progress that we've had just in a number of years, and if you can forecast out the momentum that we've been building, it's really quite exciting. But if you zoom out and do look at these big global issues we're facing, like climate change or rising inequality, we do need to make sure that we start pushing ourselves and everyone we know to be thinking bigger and bolder. Because there is a big gap that we need to close if we are to achieve the SDGs. And it is going to take leadership from all sectors to really get there. And I think it will be practitioner-led. And we will hopefully bring a lot of other people to follow us in our journey.
So that's I think that makes a lot of sense. One of the things we've been noticing at the FT, and you may have seen it a couple weeks ago, we did a new kind of branding campaign, the new agenda we're calling it, where the thing is capitalism, time for a reset. We saw in the US the statement from the Business Roundtable talking about stakeholder primacy versus shareholder primacy. And then the newsletter that I work on, the Moral Money newsletter, is all about this stuff. And the conversations around capitalism and what capitalism can do and the role that it can play seems to be changing to me. There seems to be a shifting point of view on that. But you guys have been doing this for a long time with impact investing. And how do we take that next step to get impact bigger? With all of this conversation changing, the latest number that you guys put out was around $500 billion in impact assets. All we hear all last week is we need trillions. How do we do that? What is the mechanism that makes that scale up?
No, thank you for that, and I really appreciate the work that Moral Money is doing on help, like broadening the conversation about the relationship between money and our values in the world we want to live in. And I think that it really strikes at a moment where we're seeing greater recognition of that disconnect, whether it be from corporate leaders who are saying that there's a broader purpose to business beyond just increasing the profits for shareholders, or any number of kind of leading advocates from the central bankers who are are really advocating for more recognition of climate and social factors. But it is still, this thing that we do need to, this bridge we need to cross is this switch from signals, which do matter, and I do believe words and signals are powerful, to real action and to real deployment of capital, and we have yet to see if, how the corporations that have made this pledge around a stakeholder-driven approach really internalize that into the way that they operate. I think for the investment community, we do need to move the market at a quicker rate, but it is this question of how do we keep things in sync? And what I mean by that is we can already see some of the businesses that all of you have been building that continue to grow will need a lot more capital to continue to grow, and we need to engage a broader set of investors who can provide that financing. At the same time, if we got a lot more investors to allocate capital, they need places to put it. We can't have a lot of dry powder if we want to keep growing this market. And so these things can't move too far out of lockstep in terms of the supply and the demand. So as much as we're doing work trying to engage more mainstream investors, whether they be individuals or institutions, all the work that we're doing and all the conversations we're having here about how do we more effectively build businesses that can grow, how do we push the frontier of finance, how do we engage catalytic capital to help develop new business models, is absolutely critical for laying the groundwork for future growth.
I'd like to ask about the role of regulators in this. I think we're seeing, with the TCFD and the work that the NGFS, the Network for Greening the Financial System, is doing, kind of moving in the direction of the work the EU and the European Commission are doing on the ESG taxonomy and the green bond regulations toward setting up some standards on disclosure. There's a ton of different metrics out there that people can report on, but you guys have just recently done some work on impact reporting. And my question is, what role do we need to look for the regulators to play in this in terms of mandating some sort of disclosure, and how far off are we on creating some sort of impact metric that could be a standard for the industry so that people can compare one investment to another on non-financial matters?
Yeah, well, I think I hear at least two parts to that question.
Yeah.
I think one is about what you'd asked about earlier, about is there this time for kind of a shift in the capitalist system, and if that is the case, certainly government has to play an essential role in that, maybe leading or maybe following, but I think it's absolutely critical that government does write the rules of the game. And one thing that we are seeing is a lot of great progress in terms of starting to see some really promising signs of governments incorporating social and environmental factors in regulation. And that is an important pivot, and people have very strong views on regulation, and it depends on the regulation, of course, but if we are going to make that transition from the work being driven by enlightened leaders who are committed and out ahead of the market to something actually becoming systemic and just raising the bar for all activity, government will eventually need to be involved. And so I think that an important role for this community is to help shape those policies so they do actually drive the right types of outcomes. But I think that is something that is underway right now, not everywhere in the world, but particularly here in Europe. There's a lot of great and interesting activity. On the impact performance work, we're really excited about this research report. Two reports we just launched here, in part because we've been working with all of you to help build common standards around impact measurement for some time. And we just launched Iris Plus earlier this year. And Iris Plus is our comprehensive system for translating impact intentions all the way to real results. Helps investors land on the core metrics to track their progress against sustainable development goals. But with that, if people are tracking the same things, that lays the groundwork for comparability. And one of the things that we've been hearing loud and clear from our network is that there's this commitment to driving impact performance, but how do we actually understand how we're doing? And investors are often operating in a vacuum of data when it comes to their impact performance. So this research that you're referring to, evaluating impact performance, these two pieces we just announced today, are a first step in trying to look at impact performance across portfolios. And several investors who are here took the courageous step of sharing their data, but I think it's really critical to start having a conversation about how are we actually doing when it comes to increasing access to clean energy or providing affordable housing, and what can we learn as individual investors, but as a community that helps us become smarter about how we can drive stronger impact performance.
So what do you think is the biggest hurdle in terms of scaling up the impact investing market? A couple sessions I went to earlier today, there were still questions about perceptions around returns. There's still questions about fiduciary duty and how impact can or cannot work depending on how you define fiduciary duty in whatever jurisdiction you're in. In your opinion, what is holding this market back and what needs to change to get it where it needs to go?
Well, it's tough for me to boil it down to one because, of course, we have our market roadmap, which has 6 different categories of action that we think are important. But I may kind of narrow it down to 2 buckets. I think one is a set of technical things, and the other is actually a bit more cultural, and I'll explain what I mean. But on the technical side, we have all the work that we're doing here around driving better standards around impact performance, trying to help develop best practices on how we think about portfolio management and how we kind of educate more investors to build out their impact investment practices. Those are all absolutely critical, along with things like developing new products that engage a broader set of investors. And we've been working at that on many of those efforts for a long time at the GIIN with all of you. That, of course, needs to continue, but in parallel, I think what's also important, and that came through in many of the discussions here, is that we